Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Wow! Welcome back, folks. Sorry about that. Got a little technical problem, but we are back. Yesterday's gone, tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 427, Nasdaq's up 159, S&Ps are up 47. Percentage-wise, what we have out here, you have the Dow Industrials up 1.8%, Nasdaq up 2.2, S&Ps up 1.8. Gold contracts trading down $2 at $13.2840. Silver up 8 cents, $16.33. Copper flat $2.99. Light sweet crude up 50 cents, $64.84 a barrel. Notes and bonds. This is a big number, folks, so check it out. You get the 10-year note right now, the 30-year bond rather. 30-year bond trading up 19 ticks. We have 279,000 contracts, which is good contract volume on the 30-year. You're going right into the high from the 6th, which is 146.21. You got to 146.24. Bottom line is that you're moving with strength. These bonds want higher price. We go over to the notes. We take a look at the notes. What do you have inside the notes? Same type of setup inside the notes. Notes right now, 1.1 million contracts. That baby is going for 122.02. We are at 121.02. Bottom line, what you have out here, you got a counter trend bounce once again. Volatility in spades. No two ways about that. You want to go over and take a look at. We have three actually confirmed ABC structures on the way down. And what you're going to see here, they're going to turn into complex ones, which is really cool trading wise. So this is what you have. We broke the B point on the Qs yesterday. You did 89 million shares as it was breaking the B point of 158, which was 80. Bottom line, you're going up on 50. Guess what? Yeah, more than likely we'll get up to the 165 again. That's a complex ABC structure down, however. And what that means, when a complex ABC down is you take out the B point, take it out with volume, get back on the other side of the B point. As long as you do it with light volume, which we're doing dramatically, then I suspect we're going to go into the highs that were generated out here on Tuesday, and more than likely you're going to see it give it right up again. Risk reward is pretty incredible when you see complex ABC structures on the way up or on the way down. It doesn't matter which way they go. We go take a look at the composite. The composite also has a confirmed ABC structure on the way down. Composite out here. Composite took the B point out, took it out yesterday with volume, the B point being 69.22. Bottom line, you're going up with lighter volume. You can expect to get to the 72.55. Now, the ABC structure down in the composite has a price projection of 66.10, and we're at 7,100. So that's 1,000 points down, which is a beautiful thing. SMHs, we go take a look at the SMHs. What do you have with the SMHs? SMHs also an ABC structure on the way down. That broke the B point yesterday, broke it with volume. You came down with 10.9 million shares, going into 8 million. You're going up on 5. Bottom line, those SMHs have an ABC down, going under the February 9th swing area. And what I do expect, you're going to get a bounce upside 109. The Qs have a price projection of 148.84, and we're at 161. So volatility, yeah, we got it in spades all across the board. Let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. And don't forget, folks, Andy's got a great show here every Tuesday and Thursday, 5 to 6 Eastern Standard Time. Today, because we have a holiday in the weekend, he's going to be on at 4 o'clock for you, growling and prowling, getting you all the information inside the commodity market. And don't forget, Andy has 2 great newsletters. He has Daily Essentials, which is his daily newsletter. He has the Technomental Commodity Report, which is his weekly newsletter. You can take a look at both of them. Test drive in 30 days, money back guaranteed. Andy Hecht, what's going on?
Well, lots of action today for quarter end, huh, Tom?
Oh, totally, man. Totally. Hey, this is what makes the market.
In these markets. Wow, the stocks are blasting off. They're trying to get some of these indices up to unchanged for the quarter.
Yeah, that's going to be probably hard to do, but bottom line is that
listen, this is window dressing at its best, in my opinion. You know, they're taking out everything.
This to me, this is when big downdrafts take place. This is how they take place. That's you know this will go on, folks, for about another 4 or 5 weeks, and that'll be a one-way market, just straight down. That's kind of how they work.
Yeah, and don't read a lot into the price action today. You know, in any of these commodities or anything. Look, we had grains exploded today. You know, you had soybeans up 26 3/4 cents. You had corn up almost 15 cents. You had cattle limit down. You know, lots of craziness going on in markets.
So did we have the report come out today, Andy?
Which, the natural gas report?
Any report? No, I mean for the commodities to move like that.
No, this is quarter end stuff. By the way, listen, we're at the end of March. We're coming into the second quarter. It's planting season. There's a lot of uncertainty.
Okay.
They have sold those markets down over the last couple of weeks from pretty high levels. Let's put up a soybean chart here so we can watch that. They've come down from pretty high levels, and today on big volume, you know, the uncertainty is here. You know, consumers are saying, hey, I don't want to get left behind if in case, you know, what happened in Argentina happens here in the United States. So, you know, soybeans is the market that's in play because that's where the meal really took off. Let's take a look at the meal price today, because that, I would think, is driving beans, and that's what it is. Meal putting in a bullish key reversal up to 384. And let's look at the oil. The oil is also moving, up around 32 cents per gallon. So lots of action here. Very tame in the precious metals, though, Tom.
Yeah, hey, at least they didn't take us south, man. That's the way I'm looking at it. Do you know what I mean?
Yes, in markets where there's craziness. Now, the dollar, you know, the dollar was another candidate for a big move on a recovery today, and it just hasn't happened. This thing has not traded 90. We'll see what happens next week, but it's been, you know, look, it looks like it's setting up for another kind of failure, another disappointment in the dollar.
You know what's amazing is that the dollar, folks, okay, had every right to get up to 90.490 today. Every right, okay?
Not only every right, it should with the interest rate differentials.
No, and it failed again. I mean, it's amazing. You know,
underlying weakness, baby.
Yeah, it's pretty intense, man. And what I mean, folks, is this. We had wide price spread yesterday in the dollar. You had an expansion of volume, but every time it gets close to any bounce at all, it gets sold down, and then that's it, and it goes right back down. It's amazing, man.
Amazing.
Yeah.
So let's talk a little bit about the bifurcation between crude oil and the XLE, which continues. I mean, you have the XLE at what, 67 and change here? Maybe 67.50. It's rallying today. But you have crude oil at $65 a barrel. So if you compare that to where we were in January, I mean, crude oil's come down like 2.8%. The XLE is down like 14%.
Oh yeah.
This is wild. This is wild stuff.
And what you did have yesterday, so let's look at the XLE again, because we came down. Now the XLE might be see, watch. So the XLE is trying to do an ABC down. Yesterday, the XLE came down with 18 million shares. You're going up with 9 today.
Yeah, that's a bear. That's not good.
No, stay right there, folks. Andy and I are coming right back. We have the Dow Industrials right now trading up 384. NASDAQ is up 132. S&Ps are up 40. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talk with our man, Mr. Andy Heck. We are talking markets. We have the Dow Industrials right now up 378. Nasdaq's up 134. S&Ps are up $40. And, yeah, this is quite a ride, Andy. No two ways about it.
Absolutely, absolutely. So they try to take palladium apart today. Did you see that? They got it down to like 934.40. It's bounced a little bit, but still down about $15 on the session. You know, just a lot of volatility across all markets today. We see this a lot on quarter-end days, especially when there's some data out. Now, we also had natural gas numbers this morning.
Yes.
63 BCF withdrawal from inventories as of the week of March 29. The week of March, I think it was the 23rd last Friday. We have inventories at 1.383 trillion cubic feet. That's the lowest amount since 2014. Now, natural gas has rallied. We're up from, you know, just over 260. I think we got down to 261. We're up to around 273. But, you know, it's certainly not lighting the world on fire. But one thing to keep in mind, natural gas rallied into the spring, into April and May, last 2 years. So maybe we're seeing a little bit of that now. It's an interesting commodity. It's been making higher lows and lower highs, which means that the range has been narrowing. And that happens a lot in markets before they're ready to break in one direction or the other. So keep your eyes on that natural gas market. Stocks are 33% below where they were last year, 20% below the 5-year average, according to.
And they were below what they should be last year. That's amazing, man. Right.
But
right?
natural gas rallied last April and May, and it also rallied in April and May of 2016. So, you know, I'll put up a weekly chart here. It's, you know, there's a pattern here, so we got to just be mindful of that. A decent kind of move today in the natural gas market that looks like, let me take a look, it looks like it's putting in a bullish key reversal on the weekly chart here at the end of the quarter.
Wow.
So,
Hey, let's take a call. We get Rick in Orlando. Hey, Rick, what's going on?
Brother, you hanging there?
How you doing, man?
Doing well, Tom. Thanks for taking the call. Hey, Tom, AKCA, please.
AKCA. So this is a light stage biopharma company. Lows $8, the highs 33. So what are we doing with this?
Quick question, Tom. I'm looking, is this an ABC up? In other words, I'm looking at 227 or 14 for the A point, and then the B be 34?
It could be. Yeah, let me see what the reset. One second. How this retraced first. Okay, so you're only at 50% retracements. Okay, so what he's asking, folks, is it's setting up an ABC up. So you've had a big expansion up. Let me put this on a weekly for a second. So on a weekly, well, you know, it could be a potential one. On a weekly, you know, it went into that swing point of 31 with volume. You know, we went in with 4.6 million versus 2.6. That's normally a decent setup. You know this is highly speculative stock, right?
No doubt.
Yeah.
Exactly.
You know, if you're gonna buy it, what I would try to, you know, get it somewhere on 21, right where it broke out from. Normally, when you see this type of breakout, like, see, it already finished what it should have done. 24, when it broke out at 24, you had $9, which is 34. Yeah, 33. See, here, watch this, Rick. You see, it was in a consolidation, right? Broke out of the consolidation on the 15th of March. The price projection there was exactly where it went, to 33. So when you have something like that, you've already finished one price projection, it's best to let this thing come all the way back to the breakout area, which would be $20.81.
Got it. It's coming down nicely. So.
Yeah.
Awesome.
Cool, man.
Thank you. Thanks, Tom.
Okay. Have a great weekend. Have a great holiday, man.
You too. Bye-bye.
Thanks, man. Yeah. So, you know, we got a traders market here, Andy, in a big way. It's pretty amazing.
We
actually.
certainly do. It's the Garden of Eden for volatility. That's no question about it.
It is, you know.
So I want to take a quick look also at, you know, some other markets that are moving big today, the meats, and I know you're a carnivore, so cattle prices just the nosediving here.
That's down limit, isn't it? Yeah,
down
$3.
the limit and down the limit, and feeder cattle as well. But yesterday, the pork market put in a bullish key reversal, and that's hanging around the highs. So you're getting some interesting kind of changes and bifurcation in the meats as well. You know, like I said before, quarter end, a lot of crazy things happen. This has been a very volatile month, February and March for markets in general, and we're just seeing that kind of magnified today on a Thursday when there's no trading tomorrow. You know, you got to write off a lot of what's going on here, but there's a lot of position squaring going on, Tom, today.
Well, yeah, what does happen is this, folks, is that volatility actually started in the Bitcoin market. Bitcoin went first. Ooh. Now the broad indices went. Now you're seeing that you're getting volatility in the commodities. This can go right across all asset classes. If the volatility goes into the currencies, folks, then really watch out, because then you're talking about something that is really intense. You know,
absolutely.
Really intense.
Look at Bitcoin today, 74.27. I think that had the death cross.
Yeah, let's this Bitcoin is going after now the
it's going after zero.
Well, it broke the swing point of 73.86. No, it's into it. Yeah, 73.86. Okay, so it's into that bar. It hasn't broken it yet. We got to 73.28 today. We did break it. But you've closed, well, Bitcoin never closes. Right now it's above it. But that's saying that it's going down to this 59.22, which was the low. The thing that's intriguing about Bitcoin, folks, is that, you know, when you read a few articles, it looks like the break even for Bitcoin miners is $8,000.
Oy.
So if that's the case, Andy, it's going to be like a commodity. It can go under the production cost, but guess what? How long is it going to stay under there? We'll find out.
It could be. Listen, this is a crazy. I looked at the whole thing. You know, I look at this, especially in my technical commodity report each week. I basically look at all. I view these as commodities, so I look at the whole asset class. The whole asset class was about 300 billion yesterday. And by the way, all of the major ones posted double-digit percentage losses just on a weekly basis.
Yeah.
I mean, these are some big moves in this puppy.
Oh, yeah. Here, watch. I'll bring that up. I mean, even this morning, Ethereum was down.
About 408, something like that.
Yeah, it was down 11.5% this morning.
Yeah, you have Ripple. Ripple's gone from over $3 to like 54 cents.
Yeah,
these are some wild moves. I mean, you know, markets, you know, commodities tend to be the most volatile markets. They ain't nothing compared to what we see in these digital currencies. Yeah,
Bitcoin and cryptocurrencies is definitely taken over. There's no doubt.
Yeah,
pretty amazing.
Amazing stuff.
Yep. And, you know, here, let's go look at what was intriguing here, that not that silver caught a bid, but they didn't get silver negative, which is like, wow.
That's telling me there's shorts in the market. I mean, one of the things, you know, it's like the emperor has no clothes. On these kinds of days, you can see what the positions are. The big markets that move big, there are big positions. When the markets aren't moving, there's not too many positions.
Pretty amazing. Listen, folks, you stay right there. Andy's going to be coming up in 20 minutes. Andy, have a great Passover, man.
Hey, happy Easter. Enjoy it.
Absolutely. You also. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. TheTigersDen.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. The Dow Industrials right now up 356. Nasdaq's up 123. S&Ps are up 38. If we do go look at the indice volumes out here, let's see where we're laying out right now. Sorry about that, folks. There we go. So NYSE, you're at 474. So that's going to be light volume, and this is important in the context of these ABC structures that are in place on the Nasdaq and the composite, NDX 100, the composite, and the SMHs. The composite, 1.9 billion. It's not going to do it. It's going to do probably 2.3, maybe 2.2, and we came down with 2.5. So you have those ABC structures still in place. We do the SMHs, we take a look at the SMHs, same type of setup. In fact, the SMHs almost look like they want to fail right now, because if the SMHs actually close below 104.73, it's almost like they couldn't get back inside this B point. They get back inside, but just barely. The way these are trading right now, this looks pretty weak. Let's see. Yeah, they just had that little downdraft. Let's go take a look at one of the monsters in it is NVIDIA. NVIDIA's up 12 bucks. That is coming up with 19 million versus downtown with 35. There's not much there. NVIDIA 242, 232.52. And that's what a lot of these want to do. A lot of these would go into the lows of the 23rd. That's how you want to be looking at some of these. Let's take a look at some of the higher volume stocks in this low volume market out here today. Facebook is up $7. You have Microsoft up $1.97. GameStop is down to $1.50. They came out with numbers last night. You got Square up 181. Some of the Dow stocks, let's see where the Dow Industrial, well, actually, we'll go right inside the Dow to see the strength versus the weakness, and I'm sure we get good old Boeing, because Boeing, no doubt, is a monster number on a continual basis. Boeing's putting 54 positive points into it. You get 3M putting 26. Home Depot's putting 22. Now watch this. This is the big one, folks. Oh, man, coming into the close on this one, this is insane, and this is what it is. So, Goldman Sachs. We were talking about this yesterday. Goldman Sachs, this is the end of the month, folks, okay? So what we also have is the price point, and it looks like Goldman's going to close above it again and just make it. So 250.70 is the number. And what that number is specifically is this. That was the highs of 2007. We took those highs out a year ago. We've been up here for a year. A close under that number is a total failure. The reason being is that when we actually took this out, we took it out with 96 million shares, then we got to a higher high with 53 million, and then a higher high with 72. So your correlation is, if even I take the highest one, take 72. 72 million into 227, and it's got a whole price. So these next 15 minutes inside Goldman are really crucial. This is wild, man. This is pretty cool, you know, but that's going to be important. Why? Because if we go over to the XLF and you take a look at the XLF, what you saw with the XLF, this also came down into the February 9th level, had volume behind the move, going up right now with 47 million versus 89 on the way down. There's more sellers than buyers here. You get counter trend bounces. Let's go look at the IWM. The IWM had been the strongest indice off the first leg. Off the second leg, bottom line is that it came down with volume. And now what you're doing a counter trend bounce, dramatically lighter volume. We had come down with a 35 million, rep with 17. This whole market, folks, is a setup that we're going to see a lot lower prices. It's going to be pretty wild watching this shake out. And if you look at any market that goes dramatically lower, most times you do what we're doing right now for a good 6 to 8 weeks before the big legs start, and they just don't come back. The the UK, the FTSE 100, what do you have out here today? FTSE 100, bottom line, failed on price, failed on volume, and this is really cool in the aspect of where markets, one world markets, where markets speculating where we'd go. The FTSE got up to 7109, closed at 7,000. The B point, not the B point, February 9th is 7,079. Couldn't make it. Gave it up and gave it up in spades. The DAX in Germany, we go take a look at the DAX in Germany. What we have with the DAX in Germany. That went up 156 bucks today. You're in the bar. The top of the bar is 12,296. The bottom is 12,003. We are at 12,096. Says quite a bit. It says quite a bit that lower prices are going to continue to come at us. Let's go look at Google. So Google is one of the stocks that are getting ready to jump the creek. So I want to actually look, see Google, where Google's going today. Google's up 30 bucks. The creek is set up at 992. We came down on 2.6 million, 3 million, 3.3. You're up on 2.2. Doesn't fly. Doesn't fly, man. Amazon. Let's go take a look at Amazon. So Amazon out here. Ooh, look at Amazon. So Amazon can't hold price. Amazon's going into February 9th's bar. The top of that bar is 1383. We got the 1365. And if you do put these on weeklies, what you're going to see is that you are digging into the February 9th bar, and you are digging into that area with some real volume. So even that aspect is saying Amazon wants to go lower. Facebook, we go take a look at Facebook. Facebook is just, I suspect, giving a nice counter trend bounce. Look at how anemic it is. This is going to be, there's going to be so much money lost on Facebook. It's sad, folks. So Facebook is going up on 53 million. You're going into 126 million. You're going into 129 million. That's on the daily. You put this on the weekly, it's a mess. You come down with monster volume. You came down to the breakout area of July, 151. We hit 149. You did it with volume. Once you do it with volume, you're going to at least retest the high volume low, which would be the 149 and 02. We'll see whether they're going to break it, you know. But you talk about sticking out like a sore thumb. This volume is so dramatic coming off the high in Facebook, and depending on how long you've been listening to me, and if you have time, the out of time of the trade, when you come off a high with volume, the correction is much larger than a normal correction, because that's technically, fundamentally, I believe the way that this works is that when you're coming off a high with volume, you have large operators that have sold their positions, and so normally when stocks are coming down, what ends up happening is that those large operators are buying more of their equity because they're going to be in it for many years. Well, guess what? When they get out, you need a lot of large operators to go in. When there's no one in there, that's coming off a high with big volume. See ya. Don't want to be ya. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And when we take a look, just another quick look at the NDX 100, what you're going to see here, you get complex ABC structures on the way down, folks. Volume's just not there. 59 million shares. You're going against the 80 million, which is the B point. You got on the other side of it. You already broke down. Bottom line, February 9th, 150 is the low. The price projection on that is 148.24. And on the composite, this gets intense on the composite also, because the composite right now is trading at 7,071, and the well, that's not that bad. It's only 500 points. The ABC structure on the way down is 66.10, and the low of February February 9th is 66.30. So bottom line is that over the weekend, get some rest, have a good weekend. Coming back at the beginning of next week, what I do expect you're going to see, you'll see a few bounces because we got window dressing happening. First is on a Sunday. You got Monday and Tuesday. Guess what? After that, you got a lull of about a good 10 days before the earnings start coming out, which, you know, bottom line is that stocks would have a chance to go somewhere on earnings. But guess what? The way this market is trading, this market wants lower price. DAX already is at lower price. The FTSE is under the February 6th level. Let's go take a look at Boeing quick, because what you did have, Boeing broke that yesterday. Yeah, see, Boeing's there too. Boeing's up $7 right now. Your February 6th level is 317. You came down yesterday to 311. You did that with 5.6 million shares. You're up on 3. Bottom line, people walking in the store. There's no one in the store. They're giving the money up. And guess what? That money's going to be gone. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like fly with it. Thanks for being here, folks. Have a great weekend, safe weekend, great Passover, great Easter. Stay right there. Andy's coming up, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.